104 declares, enter into his gates with thanksgiving and into his courts with praise. Be thankful unto him and bless his name. For the Lord is good, his mercy is everlasting, and his truth, it endures to all generations. Come on, let's sing to the Lord. We songs of reverence, raising our voice in one accord.
God bless you, Liberty Nation. And welcome to LIN News. I am your host, Apostle Darlene C. Turner, the co-founder and president of the Liberty International Network. And tonight we have a very special program for you. Listen, I want you to stop. I want you to gather. I want you to text and get your brothers and sisters, your cousins, and all them. Have them to gather around because we have some phenomenal information for you to help you to live your abundant life. How many of you know that God has called us to live life abundantly? And he desires that we not only prosper and be in good health as our soul prospers. So that is a total complete wholeness of life and health and spirit and prosperity. And so tonight's broadcast is dedicated to another part of that equation. And I want you to join me in introducing to you one person of whom is a friend of mine that's been, I've known him, I think we figured out about 37 years. We know we don't look it, okay? But I met him about 37 years ago at American Express. We worked together. And then another person who I just met, Emily Maybrook, and Rick Panlilio. But Emily, I just meeting her, I have just had a divine, I know it's a divine connection. And I wanted so much when Rick called me and told me about what they were doing together. I just had to tell my LIN family. So I want you all to welcome now to the program, Rick Panlilio and Emily Maybrook. Thank you all so much, Rick and Emily, for taking time out of your day today to join us.
Our pleasure.
Thank you for having us.
Thank you.
Yes, it is my pleasure. So listen, I'm so excited. As I said, I've known Rick for a long time. And Rick's a straight shooter. You don't have to worry about anything with Rick. But Rick, tell them a little bit about your background.
Okay, how much time do we have, darling? Okay, lifelong Chicagoan. Pretty much grew up in the city, in the Humboldt Park area from the 60s and 70s. And I stayed local, went to Loyola University, got my degree in business and major in financing. And then from there, I started working at American Express, and that's where I met Darlene. My goodness, back in the 1980s. And then we just forged a really good relationship. And even to this day, even though I don't talk to her that often, we still have that bond, and it's a blessing. Then later on, raised my family, moved to Vernon Hills. I've got 3 grown children. They're all done with school. And then I'm going to be a grandfather for the second time this year. So blessings all the way around. And but then also,
Go ahead.
I was just going to say, in terms of my real estate background, I've been dabbling in real estate since the 80s. But then because of some circumstances, some opportunities that came my way in 2002, I became a full-time realtor at that time. Began this business for a long time.
I don't know what that was. I just heard a noise.
All right.
Okay, so you became a full-time realtor in what year?
2002.
Okay.
2002.
Okay.
I am not your traditional realtor by nature. I always say that I do a lot of non-traditional stuff, and but I don't want to take up too much of this interview. I want to let Emily introduce herself as well.
Okay, Emily, tell us your background.
Yes, absolutely. Thank you so much for having me here. And it's been such a pleasure meeting you, darling. Um, when Lyric told me about you, I told him, I'm like, I have to meet you. And lo and behold, it was like a divine appointment. Um, Little background about me, I was born and raised in the Philippines, and I moved here in my early 20s when I turned 21 in the early 1991. And my parents immigrated here in the late 80s. So I joined them. And after that, my mom told me, you need to get your real estate license. I was still working on my bachelor's degree at that time in finance. And she told me I need to get my license. So, as a obedient daughter as I am, I followed my mom's advice. I took my real estate license and then sold real estate from 1991 to about 1995, or middle of 96. And then I pursued my degree. It took me 10 years to finish my bachelor's, but I finished it and I have a bachelor's in economics. I love that I could go through the whole cycle of the market and understand what's going on, and understand both sides of it. Being a realtor back for 5 years, and now in the business. So now I just after that I focused on mainly on financing, just helping a lot of families navigate through the complexity of financing in order to achieve their dream of home ownership. And I've been doing that now for about 28 years, and my expertise is lies in guiding a lot of homeowners from being a first-time home buyer to owning their second home and into owning investment properties so that they can build wealth through that first step of being a homeowner. And I have a passion to teach. I have a passion for first-time home buyers. I believe that if someone is being guided the way through how to take care of their credit, from their credit to everyday budgeting and their decision in finding the right home. And of course, with the guidance and help of Rick, we'll be able to guide them through the whole process. And my passion in teaching others is comes from the fact that I was once a first time home buyer. And as an immigrant in this beautiful country, you have to still go through so many things. And you got to go through asking yourself, who is the person that I can trust? And when I ask myself that, being a lender, I ask myself, am I the person that they can trust? Yes, I want to be the person they can trust. And I've been doing that now for 28 years. I have license in all 7 states. I moved here in Illinois 10 years ago. My husband is, I married somebody from Chicago. So, you know what love does to you? It makes you move all across the other side of the globe, even if you don't want to be in the snow, right?
Right.
So
Yeah,
I've
that's
been here for
love.
10 years. Yes, love. I've been here for 10 years now. And I'm a branch manager with Premier Mortgage Resources. And I love this company. We have so many programs that we could offer. And we will discuss a little bit more about that later on.
Okay, very extensive background. So let me just kind of recap what I believe I heard. So with the combination of both yourself and Rick, it sounds like you all have the whole process and systems from education, because you do education, you help prepare people with credit, with understanding finances, what to do to prepare for home ownership. But then Rick helps people to not just find properties, but Rick, I'm sure you give a type of informal education as well, as they're looking for properties, what to look for. You know, I'm sure when people come to you to buy a home, there are a lot of things they may not know, or things particularly that they don't think about or consider. Do you find yourself doing that, Rick? Like having to kind of, because again, a lot of people have never been through the process, of
Absolutely.
home ownership and ownership, have the dream of owning a home, but oftentimes don't look at everything that goes along with that. Do you
I pride
find that?
Yes, I pride myself in actually finding solutions. There's real estate. There's so many different things in real estate. You got commercial, you got residential, sure, but it's about finding out and analyzing the deal and strategizing to find out, how to put the deal together and help these individuals and buy that property. But also, I look at it from the standpoint of an investment. It starts with that first home. Once you get that first home, it becomes easier to get the next one and the next one, and that's how part of one way to build your wealth through real estate, if you will, besides all the other avenues out there to increase your wealth and pass on to your generations to come. So basically, I always look at it from buying a home is the first step, all right? And after that, the next one becomes easier, and being a landlord is not even that difficult. And so now you got more than one property that can actually appreciate in value, and now you're building wealth that way, getting your dream home and building wealth. I see the caption at the bottom. Absolutely.
Absolutely. So, just for everybody who's jumping on now, that you may not be clear on what we're talking about today. We're talking about getting your dream home or properties or investment properties, building wealth. Okay, and we're talking about this with people who can help you to do it, who can get the job done, and who has vast experience to do it. Let me say this. I want to say this from a spiritual standpoint, but then we're going to get back to the natural things. Everything about God and his promises was connected to land. Whenever he gave a promise, he gave land. The people who he made a covenant to, they had properties. He delineated what land that they were to have and the boundaries of that land. So I want everybody to understand that that is a part of the covenant for us to own properties and own land. And so that's something and that's how we can be lord over the land, is to own the land. And so that's one thing that we encourage people to do. So both Rick and Emily, however you all, whoever wants to answer this first, what do you all find to be the common barriers for people who are trying to buy a home?
I'll I'll answer that question.
Okay.
As you know, right now, there's actually a lot of barriers right now. When you look at the economy, we've got a high demand for homes with very low inventory, and I'm looking at that as a barrier that we cannot control. But there are barriers that I'd like to talk about. Three of them that we can control. And those are number one barriers would be your credit challenges. You've got people who had been through the whole economic cycle, have owned properties before and then lost, and then they have to rebuild credit. I help people rebuild credit. I help people from the beginning, from not having any credit scores. We have programs that allows them to qualify for a home loan even if they don't have any credit scores, and then we guide them through how we can rebuild your credit or start having your credit in order to qualify for a home. And I have a saying to myself that I believe in, that everybody can qualify for a home loan. It's only a matter of two things: when and how much. And that brings us to the second challenges we have would be the lack of income or lack of proper income documentation. We have a lot of people right now that has like a lot of side hustles that receives income like cash. However, they don't really document, they don't know how to document that, or it's not in their tax returns. It's not in the pay stub. We have a lot of people who are driving Uber or Lyft, and they are not stable. However, they have it on their savings account. They put that money into their savings account. They can use those as a form of income, and I guide them through the process of the proper documentation for it. And if they don't know how to document it, they always think that, oh, I don't have enough income to qualify. I'm not going to own a home. It's going to be renting. That is actually absolutely not true. The third challenge would be the down payment, and a lot of
Mhm.
people have may have a good income, may have good credit, but they don't have money for the down payment. We help them through guiding them with some down payment assistance programs available in the marketplace, especially with our Premier's own down payment assistance program. And also, we have state bond programs that can help you. And we guide you through the process of how to qualify for those.
Oh, wow. Okay, so can you state those three things, like just real briefly for them again, the three barriers that you said?
Credit, credit challenges, lack of
Mm-hmm.
income, or
Mm-hmm.
lack of proper documentation of income.
Okay.
With that also comes in with self-employed income borrowers, by the way, where they don't have a seasoning of their income. We help them and guide them through those. The third would be is for the down payment assistance program, the down payment assistance rather, where people doesn't have money for the down payment. So we help them and guide them through with our down payment assistance program.
Okay. Did you have anything to add to that one, Rick, in terms of the barriers of buying a home?
Pretty much what Emily was saying is correct. And sometimes people are just scared to take that leap. Sometimes it's just in their, it's just in their heads until they sit down with us and talk to us, and we can tell them it's actually easier to buy a home sometimes and getting qualified for a home sometimes than buying a car. Sometimes buying a car, you get turned down because of bad credit. Buying a home, as long as you have decent credit, then there's ways to be able to purchase a property. And so basically, and also in this market, the last few years, the market has been very competitive. There's been a lot of multiple offer scenarios, like Emily was saying, not a lot of inventory, but being creative and looking at ways for individuals to actually win that bid is where that's one of my strong points. Listing a property is one thing, but actually helping somebody win the bid, there's different ways to do that. And we have to work hand in hand, obviously, with our loan officer, in this case, Emily, and so that we can make sure that we can tag team and get that family, the individual, that home.
So why don't you all tell them briefly what services you want both of you specifically provide?
Go ahead, Emily.
You were cutting, you were choppy, Darlene. Do you
Oh,
mind
can you hear me? Yeah,
repeating the question again?
tell the audience what services you specifically provide.
Oh, okay. I provide financing for any of your real estate dreams, whether it be um, condominium, single family home, detached, townhouses, or income properties. And as a lender, I find ways to not just qualify you for what you can qualify now, but what you could qualify maybe working with your credit or whatever the challenge that you may face, working through the process of educating you and providing you the right information so that you can best place yourself in a better position to own a home, not just owning it now, but also to keep it and be a responsible homeowner. Um, I believe that when God blesses us with a responsibility and we take care of it, He's going to bless us even more. And my passion in helping others go through this process as a stepping stone could be you being a first time home buyer, and then you take care of that small, as God blesses you with small things and you become faithful with that, and then He helps you through the whole process of the next step and the next step. I pride myself, like Rick, that I've been in the business 28 years, and I have clients that follows me all the way through from Nevada to now I have licenses in California, Florida, Indiana, Wisconsin, Tennessee, India, and I think that was Illinois um, states, because they have seen how through my guidance and by the grace of God being able to help them navigate through from being a first-time home buyer, and now they're in their second home, um, owning an investment property that now they can build their legacy in, and not just a home for themselves, but also something they could pass on to the next generation. So my job is to really find you the money. So if you remember this, the movie "Show Me the Money," I'm that lady. So, but I show you the money through education. I show you the money by preparing you for your credit. And then we also have several other programs that are unique to Premier Mortgage that other mortgage companies don't have.
Okay, and we're gonna get to that, the uniqueness. I want to ask you a specific question about that. So, what about you, Rick? What services do you provide?
As I mentioned earlier, I consider myself a very non-traditional realtor. I've been involved again in the business for a while, but most importantly, I've been, for example, when short sales were happening back in the day when the market crashed, that had nothing to do with real estate. I always tell people that was caused by the mortgage industry. Sorry, Emily, but that's what really what happened. But that's why there's things in place right now to prevent that from happening in the future. I did a lot of short sales, and and then I'm also a commercial. I do commercial as well, and but in residential, like I said, finding out um, helping people not just buy a home but also invest in real estate. I've helped people do fix and flips. I understand right now, for example, I have a client. We're looking around for something like that. I have a very good sense of areas, and I know the city like the back of my hand. A lot of the suburbs, and I'm willing to go anywhere just to see what we can do to get a deal done. So basically, very experienced in a lot of different things. And if I don't have the knowledge or I don't feel comfortable with it, my network is very strong. All I have to do is refer that individual to that particular person, and then we want to make sure that that person is well taken care of. That's the most important thing. So I pretty much I can handle. Like right now, I'm helping some individuals get some spaces for retail. I helped an individual just recently get a space for um, a car, what you call it, not it's a car. Oh my goodness, not a car repair, but the auto body shop. Oh, there you go. And then I have a client that I help start a restaurant. So that's the commercial part of it. And then on the residential side, sure, investment properties, and also I can do multi-families and so forth. So I bring a lot of things to the table, and just pretty much very knowledgeable in a lot of different things. But it's not about me; it's the network, the people that I work with, that really makes the difference.
Yes, and I know that you all are concerned about people, and that's what we talked about. That's why we're here, because we really want to service the demographics in particular that may think that their dream of not just owning a home, but even building legacy through real estate, that they may not be able to do it. So that's what I want to ask next. What about the people with challenges? There are people that are listening today that have been through bankruptcy, foreclosure, that don't have Emily the documentation, that are self-employed, and maybe they don't have all of their ducks in order. Could you give us some examples or testimony of how you all have helped people like that um, still work through their challenges and then achieve their dream?
Yeah, I have actually, I come to mind a very specific example that Rick and I did together, and then now it's coming back full circle. Um, a year ago, a client called me from somewhere in actually in downtown Chicago. So she said that her lender couldn't qualify her on her mortgage, and they had um, challenges with credit, as well as the property has some issues. So she called me and said, "Emily, can you help me? Because I found that your record. I just saw you on. Actually, this person came from the internet, and I asked about the challenges. And make the long story short, I found out that their challenge it could be avoided, could be overcome. And the only difference was that the fact that the property that they made an offer on, they had a contract already, and it's going to expire because the the challenge um, with the credit score has not been overcame. And so what I did was I've given them options on how to pay down some debts, some credit cards, and there are certain steps that you can do to increase the credit score of an individual in such a short period of time. In 28 years of my experience, I've helped a lot of people do that. Make a long story short, I had these people rescore and was able to qualify them on an FHA loan, refer them to Rick. Rick had to find him a new property because the property actually has some unavoidable issues with safety and livability. So they said, "Oh, we don't want to buy that house if it's going to be an issue." And Rick helped them navigate through that complexity, so they don't buy something they're going to um, that they're going to have some issues with structure, as well as safety issue. That's one of the reasons why people don't make their mortgage or default on their mortgage when the property is no longer meeting their needs. So Rick helped them avoid that, made an offer on the property, and lo and behold, we found out later on that the property, the owner is not willing to fix a specific need of the property on an FHA loan. So we flipped that program into a rehab loan, where the borrower will be able to borrow money from the loan to fix the problem and to renovate the property. We end up, lo and behold, Rick was able to get them a property that has a higher value than what they have purchased it for. And within that situation, we were able to flip it into a rehab loan, like a FHA 203K. And then they turn around and fix the problem, spend a little bit of money. Then with that situation, the borrower contacted me recently and said, "My brother is now ready to buy a home. Can you help him buy his first home? I know how you and Rick went through so much for us. We wanted to refer you and make sure that my brother gets the help that you guys offer." So it's a long story on that situation. However,
Mm-hmm.
I believe the best thing that can describe that situation is really that because both Rick and I have the passion to help them. It doesn't matter how long it takes. It doesn't matter how much challenges we had to face. We brought them to the ultimate goal of being a homeowner. And now that borrower is very happy with their investment. The property has now
Mm-hmm.
increased in value, about more than 50,000 in just a matter of a year from the
In one
time
year.
that they have bought
It,
in 1 year. Yes.
yeah.
Um,
Wow.
when they bought the property, remember I mentioned earlier that the appraisal value is so much higher than what Rick negotiated the price for. Actually, the property was higher, $40,000 higher than what the price was, and so that
Mm-hmm.
allowed them to borrow the remainder of the money using a renovation loan, so that the money spent for renovation is also coming from the loan itself. It's a little bit different structure, but we were able to get it done because of the property value, because of Rick's expertise in finding them the right house, lower than what the value is. And after now 1 year of having the renovation, it went up even $50,000 higher than the original appraised value because of that renovation. So the borrower now feels like, where else can I put my money that would give me $50,000 worth of yield in such a short period of time? There's no other
Right.
vehicle that can do that except real estate.
Yeah, real estate is definitely, I think I read somewhere that 80% of the wealthy people are in real estate. Um, but did you have a story, Rick, or?
Yes, I remember that individual, Emily. So thanks for telling that story. I want to tell another story of another individual. I found him a place a block away from the United Center, and he's a young. He worked for Homeland Security, single gentleman, and he wanted to buy a 2 or 3 flat, a 2 or 3 flat. Okay, found him this
Mm,
property, and then negotiated the deal. And we used the same type of program that Emily was talking about, the 203K program. When he bought the home, he said, "Rick, I'm going to live in the basement. Okay, I'm going to rent out the other two units." And then he had one of the units being actually rented out by a company that does Airbnb. So he was getting, no matter what, every single month income just out of that one unit. And then what
mhm,
happened was after, okay, so I'm trying to remember the numbers, but within a year, the property, well, here's the thing. He bought it for a certain dollar amount. He put a certain dollar amount in terms of rehab. It was worth almost $100,000 more than what he bought it for, plus the
mhm.
rehab loan. Okay. So then he took that money and then he invested in another 2 or 3, I think it's a 3 unit. Yes, I helped him with that in Bronzeville. So that's where he's currently living right now in Bronzeville. And so he's thinking, I want to maybe start buying another one or maybe buy some land and build. So he's even talking to me about maybe building something. So we're
Wow.
having conversations about that. And so the 2 or 3K loan is a very powerful tool because, the lender gives you the money to rehab the property. Of course, you have to have your own trusted contractors. You have to get a bid for that, and then once
Mhm.
everything is done, and that's where that's when the value of the property appreciates because of the work that you've done on the property. So
Okay. Mhm.
oh, please,
I had a question about so the 203K loans are rehab loans.
correct.
Right.
Okay. All right.
So
And mhm,
in that particular example that I have brought, the borrower um, bought the property for about 180,000. I remember the numbers, and the appraisal came in at 240, and then the cost to cure or renovate or improve
mhm.
is about 15,000. So now
Okay.
the property is worth 300,000.
Wow. Wow. So, that's something that my husband used to love to do. I wasn't, I don't know that I'm that excited about stuff that I have to oversee any rehabs or anything like that. But I know there are people out there that will enjoy doing that, as he enjoyed it a lot. Like he loved it. But I want us to talk about the program that got me excited. And Rick, that's the program you told me about, the rent to own program. Could you all
Mhm.
tell them about that program specifically?
I'd like to start this one. I remember I said earlier I'm very experienced in a lot of different things. I did rent to own, but not a program. I call it a traditional rent to own, where you approach the landlord or the homeowner and say, "Are you willing to rent your home with an option for my clients to buy?" Okay, so that was back in the day, and so there are certain things that you have to negotiate and so forth. But those types of deals, you would agree on a certain price for that homeowner to purchase the property within 2 years or 3 years, maybe max. You didn't really want to, you want to you want to be able to buy the home within 2 years. To me, that's an ideal situation. And but usually there was a dollar amount that you agreed upon at that time. And then, of course, you can negotiate a portion of your payment, maybe being applied towards the purchase of the home, and so forth and so on. And then later on, a few years ago, because of the advent of what happened with the real estate industry, there's some companies that popped up. One in particular came up with a really good rent-to-own program, but they had too many restrictions, too many restrictions. And what I mean by that, there was restricted on where you could buy. There was also restricted on that was the main thing, where you could buy, and it was sometimes it wasn't very easy to find properties. And then, lo and behold, about a month and a half ago, Emily told me about their program that her company has been working on for what, Emily, a year now, over a year maybe. And she introduced this to me, and my eyes just opened up. I go, "Are you kidding me? This is unbelievable. This is the best program that I've ever been involved with, I've ever heard of." And I think I'm gonna let Emily talk about why this what the program's all about, and I can just chime in and say, why I think this is the best program I've been involved with. It's a game changer. You sometimes right now there's a word that people use called disrupting the industry. I think this program will disrupt the industry for people who want to buy a home. Okay, now everybody now that probably what these individuals they make good money, they make good income for whatever reason they can't buy the home right now. All right, well, they're going to be able to buy this any home that they want because they're the ones that are going to be choosing the property, and then this non-for-profit is going to purchase it for them, and then they can rent it from the non-for-profit. So you are basically choosing the home that you want. Isn't that a game changer? That's one of the game changers in any area, anywhere, in all 50 states, basically. All right,
Now
as
that
long as
is
it's FHA approved.
amazing.
It's
That is
it's
so amazing because I've been telling everybody, you all, I got so excited about this, and that's what a lot of people told me. They said, "Oh well, normally there's restrictions, and there's only certain areas that they could." So that's what I want you all to tell us. So just to recap, this rent to own program. Well, go ahead. Were you done, Rick? I want to, or were you ready for Emily to
I'm ready
tell
for
us?
Emily to explain more about the program.
Okay, so tell us more, and then I'll ask some questions.
Okay. Go ahead,
Okay.
Emily.
So
Mhm.
our rent, I'm so excited to tell you guys about our rent to own program. Premier Mortgage Resources had what we did was they compared and contrast all the other rent to own programs available in the United States. And I won't name names, but I have experienced both of them. The program is open to all 50 states. We have no geographical location restrictions as long as the borrower qualifies based on the following guidelines. It is based on an FHA loan guidelines. And what basically how it works is that if the borrower, for example, a prospective homeowner, can has a 3.5% down, but cannot qualify in terms of some of those challenges I have mentioned before, whether it be low credit or no credit score. Other lenders don't even want to talk to you if you don't have any credit score. We do. Um, we also allow borrowers, even with ITIN or no employment authorization documents, or somebody probably that has some credit issues as far as like whether they had foreclosure in the past, bankruptcy, collections. And I know there's a lot of people that have been through so much health wise collections on their credit that kind of just drive their credit score lower. Our company qualifies our approving buyers with low credit score as well as no credit scores. But this particular program for rent to own allows them to qualify as long as they have a 580 credit score or they have no score. If they have no score, we do a process what we call a manual underwrite. So the guidance for that is a little bit different than somebody who has a credit score. They allow them to lease the property for 10 years. So for example, Rick has a borrower or has a customer who are looking at a property for example 250,000, let's say, in in Chicago or anywhere in Chicago area. And then they have the 3.5% down payment. They can purchase our nonprofit organization called Homebuyer Ally will purchase the property on their behalf, and then they will rent with that property, that same property, through our Home Buyer Ally, which is our nonprofit organization. And they have 10 years to work on their credit, income, or whatever they need challenges to overcome before they could
Mm-hmm.
buy the property. And there is no prepayment penalty. They can buy it anytime within 1 year or 2 years, but they have up to 10 years. And in some cases, the home buyer, our nonprofit organization would allow them to even extend it up to 5 years on a case by case basis. So good borrowers that are looking to use this program is somebody who has issues with income, cash buyers, the borrowers who probably have switched from a W 2 employee, like a regular paycheck employee borrower, and
Mm-hmm.
decided to have their own business and they don't have 2 years income tax returns to prove their income would be good for this program. We would use
Okay.
bank statements to show how they're receiving the income. We can use as low as 3 months bank statements or up to 12 months bank statements to show and average their income so that we can determine the amount that they are able to qualify for. Um,
Uh,
and the advantage of the program is that while they're renting, the amount that they're paying in rent goes towards the equity of the home. The other programs that I have seen in the past does not allow them to do that, and it's their monthly payment is based on a 40-year amortization schedule, so it's not humongous. And at, let's say they are approved for 2 years to qualify for a house, they can either pay off the or assume the mortgage or qualify for another mortgage to purchase that property, and they have a specific amount of payoff on that house that they had been renting for however time that they would qualify for. Unlike all the other programs that the prices go up every year. I've heard some programs that Rick was familiar with was like it's going up between 3 to 5% every year. So borrowers, by the time they're buying the property, the price of the house is already higher than what the original amount is. Our program does not work like that. You will know exactly what your payoff is with the amortization schedule that's provided to you at the time of your lease contract signing.
okay, can I stop you and ask a couple of questions?
Mm-hmm. Sure.
Okay. Okay, because you said a lot in that. You said that the payment goes towards the house, the entire payment or a portion of the payment.
A portion, a portion of their
Okay.
payment. Because a
Okay.
portion of because the rent is what we're using to also pay the loan that the nonprofit organization acquired on the borrower's behalf. So a portion of that goes towards principal, a portion of it goes towards interest, and they have that amount set at the time of their contract. They know exactly what that is at at the time that they're presented that 40-year amortization schedule.
Okay. So if I heard you correctly, somebody who just went through a divorce or bankruptcy or foreclosure, whatever, the qualifications to get into your program, which gives them time, up to 10 years to, I guess, what happens in that time? Is it a refinancing then where they get their financing for themselves? Is
Correct.
that correct?
They
Okay.
would either assume the loan. Remember that the loan is going to be acquired through the name of our nonprofit organization. So the nonprofit is the owner of the loan and the property. So they will be buying the property from the nonprofit. They could either assume the loan that the nonprofit has gotten on their behalf or qualify for the loan on their own. And 9 out of 10, the chances are they would probably want to qualify on their own because the loan that the nonprofit have gotten is usually on a higher interest because it's an institutional program for a nonprofit. Therefore, majority of the time, by that time, um, us helping them with their credit, they would have a better interest rate. And if the market permits, if interest rate is a lot better, it might be for their best interest to just qualify on the loan on their own. And the amount of money that they had put in, the 3.5% down, which serves like a down payment or option money, is credited towards their down payment.
Okay. So let me just say this succinctly for the audience. So to qualify for this program, it sounds as if you just have to prove the income, to meet the payment for the property that you choose, and you can choose one of your liking in any location.
That's correct.
Mm-hmm.
Okay. And did you say 50 states or is it 49 states?
Actually, it is 49 states right now because New York is still
Okay.
in the process of being approved.
Okay. So in 49 states, but the qualification is at least a 580 credit score. So are you telling us that if that, because normally if someone's had a bankruptcy, they'll say you have to wait 3 years if you've had a bankruptcy to do
Correct.
anything. So are you saying that if they had a bankruptcy 6 months ago, they could possibly get in your program?
Correct. As long as they have the 580 credit score, they can prove how their ability to pay the rent,
Pay. Okay.
and they have the 3.5% down payment.
Okay, and the 3.5%. That's
Correct.
phenomenal. Number one, that you can pick your own property, that 3.5% down. It can be anywhere, and that you give up to 10 years to be able to have that transition. Rick, did you have anything else you wanted to highlight about this program that makes this so phenomenal?
Absolutely. It's because it's also following the traditional FHA guidelines. The down payment can come from as a gift, as a form of a gift from anybody. Basically, you can use your retirement account, all right? And then, like Emily was saying, a portion of that gets credited to you towards the purchase of the home that you're going to purchase at the same price that then pretty much, well, there's going to be a payoff, like Emily was saying. But basically, what she's saying though is that the price of the property is not going to go up. All right, you're gonna buy it at that predetermined price that the non-for-profit already bought it for. So you can, when the homeowner or the tenant eventually buys the property, they're gonna get they're gonna be able to avail of all of that down the road. Can you imagine? Even though you're not getting any of that benefits right now as a homeowner, you're gonna be able to get all that stuff later on when you buy the home, and then down payment. Okay, so the portion of that. And also because of the 40-year amortization, your monthly payments are going to be lower, and you know what your monthly payment is going to be. It's not like when you're renting from a landlord, they're going to raise your rent maybe like 3 to 5% a year. Even sometimes, in some cases, I had this one client that rented a townhome from one of my clients, and the reason they were leaving was because they went from 2,700 to $3,100 a month, $400 jump in rent. That's crazy. Okay, so you know what your monthly payments are going to be. The only way it's going to go up if it's the interest. I'm sorry, if the taxes on that property has gone up, then it's going to have to be added to that monthly payment. Okay, so in other words, you're going to know what your payments are going to be. And one more thing I like about this is the fact that you can actually use this program on a 2 unit, 3 unit as well, right, Emily? No, 2 unit. I think only up to 2 unit.
2 unit,
And
only 2 unit.
yeah, that's a game changer because think about this. Of course, you have to live there. The whole family has to live there. You can't rent one of the units out, no. But you live there, and then eventually, when you can purchase the property, buy it owner occupied. Now it's up to you what you want to do with that. You can rent one of the units out, and then after 1 year, if you want to sell it, um, or no, not sell it. Excuse me, move on to another property. Now you have a 2 unit under your belt. So
Mm-hmm.
it's an amazing program, even from an investment standpoint, to start off your investment journey. So 2 units, that to me, that's really exciting that you can buy something like that.
So I got a question. I mean, just to kind of qualify, and I know we're going to wrap up here, but because listen, everybody, we can't go into everything now. We want to invite you May 18th to come and meet Rick and Emily in Bolingbrook at 378 Commons Drive, where there's going to be a workshop and they'll be able to answer your questions more directly and us to get more into some of these things and you to really get on your journey of getting your dream property or investment property and building wealth. And so, but I wanted to know though, just to kind of give them an idea. just as a ballpark. So if someone is looking, let's say, I don't know what the average house is, but let's just say $350,000. That's a decent home, right? That people could get. So based on that 3.5%, I think I calculated it is $12,250. So that is what the down payment that they would need. Of course, in addition to what you already said about credit and income verification, right? So kind of, so ballparking, I know it depends on the interest rate and all of that, but just kind of a range. And we know this is not anything to hold you to, but about what kind of note would that require on a home, about a $350,000 home in current, climate, about what type of mortgage? Because I want people to kind of see, people who Rick and Emily are paying rent right now. Sometimes people don't understand that they could actually own and be on a trajectory to ownership. So
Right.
about what range would a monthly uh, note be for a home in that scenario?
Before I answer that, there's also closing costs
Rick, you
consider.
went out. You went out.
Yeah.
You said
Oh, I'm
before.
sorry. There's also closing costs that we have to consider when you purchase
Right.
the property. Under normal circumstances, I always tell buyers that it's going to require about 2.5 to 3% closing costs. And this
Okay.
program requires a little bit more because we want to help the homeowner. So what I need to do, this is where my job comes in. I have to negotiate with the seller some closing cost credit, and then but then the potential homeowner, the tenant in this case, we might want to also have an additional maybe 3% or so, just in case, for closing costs. All right. So just
Okay.
so to kind of get an idea how much money they would require for a $350,000 property, you might need about 6% all in, for this
Okay.
program. But then,
Okay.
yeah, but again, all that stuff can come from different sources, and I can negotiate some closing cost credit, and I can build it into the price. There's certain things that we can do
Okay.
to
So
take.
now, what about the note though? Because
Yeah,
I
you
want
know,
them to get an idea of, like, I mean,
Well, I
generally,
can
like,
give you I
mhm.
can give you just a range, Darlene, because
Uh-huh.
the note, their monthly payment on the rent to own is going to subject to what the taxes and insurance is in that area, as
Right.
well
Right.
as whether it's a detached home or condominium or townhouses, because the townhouse, the HOA and all that comes into play with,
Right. Right.
how much the total would be. So I'm just going to give you an example of what we have currently working on right now. We have a lady, single mother. She has 1 year left before she qualifies because of her bankruptcy. We found her a home. She's looking for a home right now around 250,000. Her monthly
Okay.
payment, PITI, with taxes and insurance in the area she's looking at, which is um, I forgot exactly where she's looking at, but I think a little bit close to Naperville area. Her monthly
Mm-hmm.
payment with taxes and insurance on that right now is around maybe about 25 or 2700 because
Okay.
of the area that she's looking at. We're
Yeah.
using average taxes.
Yeah. That's a
So,
higher area. Mm-hmm. That's a
correct.
higher area. Mm-hmm.
So, Emily,
That's a
what type of
higher,
home is
yes.
this? It's a single family home, right? What is like 3 bedrooms, 2.5 baths? That's that. I'm not helping that individual with that one, but what type of property is it?
I don't
Is it a,
think I've been looking at online just for the purpose of illustration.
mm,
How much would a three-bedroom home cost nowadays for a rental? I have not
Right.
seen anything below $3,000.
that's correct.
And I'm looking at like Palatine, like Zurich, McHenry area. I've never seen anything below $3,000. And
Yes.
Yeah.
I have I have somebody yesterday looking for a $1,500 two-bedroom, and with some of the realtors I talked to, they're like, "Are you kidding me? We can't find anything right now at $1,500. Your client needs to go up to about $2,000 to even find a two-bedroom." because with the lack of inventory that's going on in the market right now, a lot of people are holding on to their properties, and they, you know, they see that the rental property market is kind of high. So, you
Yeah.
know, we would be discussing those with them. We would be um, looking at different areas and price out whatever the possibilities are. But a lot of people don't even want to talk about owning something until you find a way for them to overcome those three top challenges that we were talking about yet earlier. And they would just think about renting for
Right.
however long period of time. And that alone is the thought of that is just throwing money away in rent, which we could be
Absolutely.
paying ourselves back instead of making another person, you know, rich on account of us not wealthier, building equity for them, creating creating wealth for others when we could be doing it for ourselves. And that's the reason why we brought this program, because this is our answer to the affordability issues that most homeowners are experiencing right now. They can't afford, in terms of owning or buying something, because of those top three reasons. And we're here, the way that Rick and I have helped others is we could help you too, because of our experience, as well as this program will be able to provide you. And one of the things that we do is when we talk to clients or customers is that we ask them first if this is a good time for them to buy something, if they are ready. If they're not ready, we continue to walk them through the whole process. And just like what I said earlier, everybody will qualify. It's just a matter of when and how
It's
much.
just a matter of when. Isn't it? Everybody will qualify. It's just a matter of when. Now, that is so, you all need to write that down
Mhm.
somewhere. That is so powerful. And listen, everyone, the reason why we're having this seminar is because we care about you and we want everyone to own a home, to build a space. Those of you that are part of LIN know that our holy convocation is called Legacy Builders. And so we are building legacy spiritually, naturally, financially, civically, relationally, in every single way. And we know that this program and this information is going to help you do just that. And I want to say this to some of you who still may be thinking, oh, this is too good to be true. I don't know if I believe it. Come on out and get the information. Bring somebody with you. This is all about opening your eyes to understanding. What I've realized is you got to get in the right rooms for vision, you know, to be open to you. Many times, if you stay in the same rooms, you won't really ever understand that there are things available to you that are available to you. So you can get that dream home. As she said, it's not a matter of, well, say that again. What is that? It's not a matter
It's
of
it's only a
not
matter
qualifying.
of when. I'm sorry.
Mm-hmm.
It's only a
Say
matter
it
of
again.
when. Everybody can qualify. It's only a matter of when and how much.
That's correct.
Okay, everybody can qualify. It's only a matter of when. And I want to say this, when you were talking about the example with the person that was sticking to that 1500, and they said, oh, you got to come up to 2000. I just want to tell people this, because there's so many people, Rick and Emily, and I had to explain this to somebody the other day. I was telling them about your program, and they were like, "Oh, I can't go over that. I can't go over that." I said, "Okay, but add in the storages that you're paying right now, and you already paying the same thing." So I want to remind people that, you know, because there are a lot of people in apartments that are paying storages for $400 and $500. And I want to remind you to add that because you're already paying it. So if you get the place that you need, you won't need the storage, you know, hopefully, and then you'll be on the way to dream ownership. Listen, thank you, Rick and Emily. Is there anything you want to say before we end the show?
Well, I just wanted to encourage everyone, come and join us on May 18th. We will go through specific examples. I know we can't put everything in one show. We wanted this to become a very authentic and practical use for you to be able to use in achieving your goal of becoming a homeowner, building wealth for yourselves. So come out on the 18th. We'll answer some questions you may have. We will be sending out invite so that you can RSVP and then fill in your questions. Put in all the questions that you are dying to ask, and we will be ready for you on that day.
Absolutely.
Yes,
Thank you again, Darlene,
Rick.
for the opportunity. And we're looking forward to the 18th. Definitely.
Yes, I'm looking forward to it. So the main thing they should come, those who have viewed this on the 18th, is to come with questions. Anything else is for them to be ready for this seminar.
Well,
Yes.
we will be guiding them through the whole process on how
Okay.
this would work, and if um, if they would like to go ahead and get things started, I'll be happy to send them a link once they do an RSVP. Be able to have them um, go ahead and get started the whole application process. And that way, Rick and I can perhaps use their example if they're willing to use their examples. We won't name names, but we could use the numbers that we're doing during the seminar or during the whole event on the 18th, and be able to put some meat on those bones and be able to like really digest what this program would look like for them. So
This is so powerful. Again, thank you again, Emily and Rick. And we forgot to say this because I asked them when I met with them privately about how long it takes, at least about 60 days. But I know I can say this. Many of you, if you will come here and do what they say, definitely by the end of the year, you can be in a dream home. Listen, how does that sound for starting a new year? And some of you even sooner than that. So again, thank you, Rick and Emily. Thank you, LIN. Don't forget, text Dream Home to 630-999-2078, and then we will send you all of the information you need. For those of you who are even out of town, we will have an opportunity for you, or can't make it physically, you'll be able to watch us over the internet. But make sure you do that, because we do have in person, we have a limited space, and we want everyone to hear and to see what we have going on. All right. Thank you again. God bless.
God bless. Thank you.
God bless. Thank you.
God bless.